Welcome. In today's video, we want to look at how to process depreciation expense on QuickBooks Accounting. We are going to be using QuickBooks Premier to demonstrate the how to do it, but this is also applicable to QuickBooks Pro as well as QuickBooks Enterprise. Now, for you to get started, you have to come to Accountant. So you have to click on Accountant. Then you click on Make General Journal Entries. So when you click on that, the QuickBooks accounting system will launch this window. You'll find up here we've got these tabs, main tab and report tab. Then we've got these buttons up here. Right, in this tab, that's where you put in the transaction date. Then in the entry number tab, that's where you put your general journal entry reference. Like in my case, I'm going to put JNL001. Right, then here that's where you pick the account that you're going to be debiting. So in this case, the account to be debited would be depreciation expense account. So you could actually pick that. Then you put in the amount in the debit column. Then here in the memo column, that's where you would actually put the transaction description. Then down here, you could pick your accumulated depreciation expense account. Like in this case, we're going to be demonstrating using office equipment. So we'll pick this account, then we put in the amount in the credit column, then we put the description in the memo column. Then you could actually save and close to process the transaction. Now, before we do an example on QuickBooks, we would want to take you to this background explanation so that you understand how depreciation works. There are a number of depreciation methods that you can use to depreciate an account, but we're going to look at the straight line method, the straight line depreciation method, which is a method which gives a uniform depreciation for an asset value throughout the years, right? So basically, if one is to ask what is straight line depreciation, with the straight line depreciation method, the value of an asset is reduced uniformly over each period until it reaches its salvage value. The straight line depreciation is the most commonly used, right? It is the most commonly used and is straightforward. So most companies, they use the straight line method depreciation, right, for allocating costs of the capital asset. It is calculated by simply dividing the cost of an asset less its salvage value, then divided by the useful life of the asset. Now, we did a graph which shows how the straight line depreciation method works, whereby the value of the asset decreases by the number of years or periods, right? Then we have a formula for the straight line depreciation method, which is basically for you to find the annual depreciation expense for a year. You are saying the cost of the asset less the salvage value divided by the useful life of the asset. We're going to be explaining the terms where the cost of the asset is the purchase price of the asset. Then the salvage value is the value of the asset at the end of its useful life. Then the useful life of asset represents the number of periods or number of years in which the asset is expected to be used by the company, right? Then so basically this formula would actually give you the annual depreciation expense. Then additionally, the straight line depreciation method rate, that is the rate at which you'll be depreciation, can be calculated as follows, where we are saying the depreciation rate is annual depreciation expense, then divided by the cost of the asset less salvage value. Now, let's look at how to calculate the straight line depreciation. The straight line depreciation calculation steps are as follows. First, you have to determine the cost of the asset. Then, second, subtract the estimated salvage value of the asset from the cost of the asset to get the total depreciable amount, right? Then thirdly, determine the useful life of the asset. Then fourthly, divide the sum of the depreciable amount by the number of the useful life of the asset to get the annual depreciation amount, right? So basically, that's how you'd actually calculate. Then we want to look at an example which we are going to use to capture now using QuickBooks, so that you see the effect of processing the depreciation expense on QuickBooks. Now, in this example, we are saying we've got company A, which purchases office equipment for 100,000 with an estimated salvage value of 20,000 and a useful life of 5 years. Right, now using what we talked about here, these are the steps we talked about, and these are the steps we're going to use to calculate the annual depreciation and also the monthly depreciation for this asset. The straight line depreciation for the office equipment will be calculated as follows. Right, first we have got the cost of the asset, which is 100,000. Then second, we have to calculate the depreciable amount or cost, the depreciable amount or cost. And how do we do that? We are saying cost of asset less estimated salvage value. So in this case, the cost of the asset is 100,000. Then the estimated salvage value is 20,000. So we're saying 100,000 minus 20,000 to get 80,000. So this is the total depreciable amount over 5 years. Then the useful life of the asset is 5 years. So for us to find or to get the annual depreciation amount, we are now saying we are now dividing the depreciable cost by the useful life, which is 80,000 divided by 5 years to get 16,000. So this is the annual depreciation amount, right? So therefore, a company would actually depreciate the office equipment at the amount of 16,000 annually for 5 years. Now, if you were to calculate the monthly depreciation charge, the company would actually depreciate office equipment by 16,000 divided by 12 months. Both a year is got 12 periods or 12 months, which will equal to 1,333. So if you were to process the depreciation amount monthly, we could actually use this amount, right? So, okay, basically that's how you could actually calculate. If you wanted to calculate the depreciation rate, we could also be calculated if the annual depreciation amount is known. Like in this case, we already know that the depreciation amount is 16,000. The depreciation rate is the annual depreciation amount divided by the total depreciable cost. In this case, the office equipment has got a straight line depreciation rate of 16,000 divided by 80. Then it actually give us that 20%. So we did a table which shows the annual depreciation here. Then of course we said not how the book value of the office equipment at the end of 5 years is the same as the salvage value over the useful life of an asset. The value of an asset should be depreciated to the salvage value, right? So now this is the background of the straight line method on how you actually calculate your annual depreciation and monthly depreciation using the straight line method. Now I want to go back to QuickBooks and see now that how do you process this. Now we have got the annual charge, which is 16,000, and we've got the monthly charge. When you are doing your books, normally you are processing your books to produce monthly reports, because management may actually want to see monthly reports. So we're going to be running a journal using the monthly charge, which is 1,333. So let's go back to QuickBooks, right? As you saw when we were on QuickBooks, I'm just going to clear this so that we start over for those who may not have seen what we did when we launched this window. Now, as I said, we now have got our charge that we have to bill for this month. And when we come to QuickBooks now, as I said previously, we are coming to accountant, then we are clicking on make general journal entries. Then when we click on that, the QuickBooks accounting system will launch this window to actually launch the general journal in which we are going to process the depreciation. So as I said, we've got these tabs and these buttons up here, but where we have to start from is here where we are supposed to put in the transaction date. So let's say we were to process depreciation for the previous month, which is April. We could just click here, then we go back, then we could just select our date, 30 April 2023. Then we come here, we put in a journal entry number reference. So like in my case, I'm just putting in that as a reference, JNL for journal 001, right? Then I could come here. I'm processing depreciation, which has got to do with office equipment. So my depreciation has got to do with office equipment, and I'm billing an annual and monthly depreciation charge of 1,333. So I come here, right? First, I have to select the account I'm going to be debiting. So I could click there and look up for the account, or I could just type in depreciation, right? So I'm selecting the depreciation expense account, which I'm going to debit with 1,333.33, right? Then I proceed and I put in the description of the transaction, which in this case is right, depreciation charge for the month of April 2023, right? So I've done that, and for this line I'm done. Then I have to come here and now select the account which I'm going to credit, so that I complete the double entry. I could look up for that account, as I said, or I could just type in office, but in this case now I want office equipment accumulated depreciation. That is the account which I'm going to credit. It will also pick the description which I put here, right? So once I have done this, I can now save and close. By doing this, I've processed my depreciation charge for the month of April. I could do this throughout the year. For each month, the charge is the same. What will be only changing will be the date as well as the entry number reference. So once I'm happy, I could actually save and close. It may bring up this. You could actually say do not show, right? Then you click on OK, right? So once I've done that, you'd find my transaction is posted. If I were to look at reports, just to see the effect of this, you would find what I did affected the income statement and also affected the balance sheet. So I could come here on reports, then I go to company and financials, then I click on profit and loss standard, just for me to see the effect of the transaction which are processed. Now we have to wait for the report to load. Now this report is showing transactions for May, and there is nothing which I did in May, so I have to come here because the depreciation I processed was done in April. So I have to come here and select the from date. I could select from 1 April, then I just come there and I refresh. When I refresh, I'll actually see that I've got now this depreciation expense 1,333.33. So far, this is the only transaction which I did. And I just wanted you to see the effect of that transaction. It also affected the balance sheet. So I could also come back again to reports and company and financials. Then I could come to standard balance sheet. Then I could click there, right? And when I click there, you could actually see when it loads the balance sheet that the accumulated depreciation under office equipment has got 1,333.33. Naturally, you'd find these figures will be on your trial balance, right? When you come to your trial balance, which we are getting by going to reports, so you're clicking on reports, then you're coming to accountant and taxes, then you are coming to accounting and taxes, then you're clicking on trial balance. When you click on trial balance, you could actually find when the trial balance loads, let's wait for it to load, it has those transactions which are here, the accumulated depreciation as well as the depreciation expense. So basically, this is how you could actually process your depreciation expense on QuickBooks Accounting. This is applicable to QuickBooks Premier. It also applicable to QuickBooks Pro as well as to QuickBooks Enterprise. Thank you for watching this video. See you in the next video. Right. Subscribe, like our video. If you find them useful, share with people who may also find this video useful. Thank you. See you in the next video. Thank you.